Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I am reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Saturday, October the 27th, 2012, and here is this week's weekend review. Before we go over the analysis here, just want to start off by saying I hope you guys are enjoying your weekend so far. Me, myself, I actually went for a 2-hour run on the beach this morning and hit the gym. And that's something. If you're in front of your screens the whole day as a trader, I would recommend that you at least get some time to do some workout during the weekend or after you're done trading, just to make you sure you can stay level-headed and focused. In any case, let's go ahead and take a look at the charts here. The first chart I want to show you guys is the S&P SPX quarterly chart. All right, every candlestick represents 3 months. And I guess the same way you look at a chart that's looking to break out, the same way you will use this chart. And the way that I interpret this chart is that every 3 months companies come out with their earnings. Okay, so therefore if you break the S&P up into 3 months, all right, and it looks like it's going to break out, obviously that means people are expecting for the next quarter to be good. All right, so if you take a look at this chart right here, we had a breakout last quarter from the previous 2 quarters, right? People got a little bit excited, all right? But now we didn't get no follow through so far in the start of this quarter, all right? The breakout level was 1408 on the S&P. If we break below this 1409 level, we start holding below 1409 and we go back below 1400, I would have to assume that we're probably going to come back down here towards 1363 or so, 1350, all right, on the basis that a lot of people got excited and this was a fake breakout that happened last quarter. And of course, obviously all the earnings are coming out bad, and that's not looking good at all. So anyway, just a chart that I want to bring to you guys' attention. As you guys know, this is a weekend review, so we're going to go over a lot of charts. So grab your popcorn, grab your energy drink, grab your whatever, and get ready to take some notes here. So let's start off by taking a look, first of all, at the SPY. And we're going to start by taking a look at the monthly chart of the SPY. And you can see here on the monthly chart, we're still having trouble breaking past those highs from the 2008 bear market sell-off. That high level from January was 147. You can see last month we hit a high of 148.11. This month we hit a high of 147.16. So we do have a lower high end for the month. And of course, the market is trading very weak right now, and the bears are in control. We do have some hope, though, as this 140 level should act as some support. As you can see, it was acting as support since back here in August, for that whole month of August, and for the beginning of September. So 140 is a level to watch on the SPY. Also coincides with this rising 20-day simple and exponential moving averages. We hit a low this week of 140.39, and we closed at 141.35. So they did get a bounce there. And if the market wants to stay bullish, they need to come and make sure that the bulls hold this 140 level. If we do not hold 140, then we could get a move back down towards 137.08 on the SPY, which remains a key level. As you can see from last year, back here from last year in May, we broke above it, trapped some longs, came right back below it, broke right back above it. So you can really see how that's a very important level to watch. So if 140 breaks, expect 137 going forward, especially if we hold below 140, obviously. And then, I don't want to get too ahead of myself, but then if 137 breaks, then it's not going to be good. But I'm not in that camp yet. Still some signs of some stocks making some decent moves out there. All right, let's take a look at the daily chart, SPY. The reason why I turned this area from yellow to green, because now we're not above it. We're kind of just in the same range. So I like to highlight the range bands as yellow. This is a yellow because you can see it was in this little range back here in August, and now we're back there. At the same time, we're holding this key trend line that comes from this inflection high, this inflection high, this inflection high. Take that line, draw your parallel channel line from this little pivot low right here, and voila. That's why you see the market's trying to hold up here. So we could get a nice little bounce right here, maybe a little bounce back up towards the 143 area. We'll have to wait and see. Really, the market really needs to get over 142, as that level has been acting as resistance since Tuesday's close. Okay, let's see here. So we're at a tricky area because it's kind of hard to get short down here because we're down so much, especially from these highs right here. We still been making lower highs. So people that may be short from back here in September, they could still be short and still be in a winning position. Regardless of the fact that we've been bouncing back up, bouncing back up. So that's the distance we travel. Just to keep that in mind there. So that's the SPY. Let's take a look at the ES daily chart. All right, want to show you guys some of the channel analysis on my system here. As you guys know, I've been keeping you guys up to date with this and been using this as a roadmap and been working, and it's been working out pretty well. And this is something that, of course, if you guys been following my work from when I had AskChrissyTrades.com and I switched to ChannelGuideTrader.com, I trade a lot in channels, proprietary channel analysis and stuff like that. So, anyways, the level, I'm going to start off with the daily chart on this one because this one's more important on the daily. You can see here that little big range that we've been tracking for the past month or so. You can see we broke down out that range here. I'm going to backtrack a little bit. All right, we had this little high base consolidation right here, broke down, rallied back up. We had that little move where we trapped those shorts that got short below the breakdown of that little level. Rallied back up. This was a jobs number. Trapped those longs as we've been real familiar with these bull traps out of these ranges since back here. All right, you guys could go back to the previous videos and look at that information. All right, then we sold all the way off. All right, if you guys were following my videos, we call this as a buying opportunity right here. That was a great buying opportunity. Rallied all the way back up. Said, we highlighted to be careful as this could be a bull trap up here as it has been the past couple times that we traded near that top of the range. Guess what? Nice bull trap. A lot of stocks got sold off, and then it got really ugly for the fact that we broke this little bottom range area that was holding as support for over a month or so. All right, so now going forward, we're seeing volatility pick up. We're seeing a lot of shake and bake action on the ES. As I highlighted in, I believe, Thursday night's video, I talked about how we're making highs, but the buys are trading low, and you can see the volatility is just picking up. I mean, just connect this low, just connect the lows from Tuesday going forward and the highs that we made on Wednesday. All right, going forward, and you can see that we're taking out the previous day's highs and trading back down, taking the previous day's lows, trading back up. So volatility is definitely picking up. We're going to take a look at the VIX chart as we have been on top of the volatility index. And one thing to watch out for now is that if we can't make a move back over this trend line right here from this prior range break that's now going to act as resistance, which it did on Thursday. If we do not get back with this trend line, guys, we'll probably just form a nice consolidation and roll right back over. All right, one thing that I do have to kind of support this area, though, is the fact that this little prior range that we had right here that we broke out of, all right, which I did a video on that as well. If you go back to September, we called the market long right here for the breakout. All right, we're kind of at the little back test area, right? As you guys know, when you break out of a channel, you go back and you back test to see if it holds. Well, we held it on, I can say we held it on Thursday. We held it again on Friday. So if we could hold above this area down here, above this 1398, 1397 area, obviously the hold number 1400, all right, and we take out that 1411 area, which has been acting as resistance intraday, especially if you've been to our chat room. We've been all over that. The chat room is mywallstreettv.com. Password to log in is smart. You want to make sure you go to wallstreettrading.com. Fill out the form on the upper right-hand side to get the free trial, the 14-day free trial. So 1411 remains the intraday resistance to watch, along with that 1416 area, 1414 area, and we're on top of that as well. Now take a look at the weekly chart. Weekly charts on the ES. All right, you can see a little bit more clearer picture here. The weekly chart on the ES. Let me take off these trend lines. Actually, let me not do that. Let me take off the studies. All right, and you can see here. You can see here that we are above this 1407 level here, still holding. All right, we did get maybe some shorts trapped that got below 1407. We'll have to wait and see how we act next week. But you can see here, this was resistance, and now it's still acting as support on this side for the short term right now. All right, so what else do we want to take a look at here? Let's take a look at the monthly on the ES. Monthly, same thing, upward channel, kind of getting some resistance right here. All right, now let's take a look at the Qs. Nasdaq, you guys know the Nasdaq did get hit pretty bad. Has been the weakest sector. If it wasn't for Apple and Amazon kind of holding up I would say that this Nasdaq would have been destroyed and broke below the moving averages here. You can see we're barely holding on to the moving averages, the 200-day and the 200-day exponential and simple moving average on the daily time frame. And so far, we've been having consecutive closes below this, below that key trend line right there, that key blue trend line. You can see we have 1, 2, 3, 4 closes below that trend line. All right. One thing to watch for, if we can get a break above these little connecting highs that you could draw from Monday from this week, kind of like a little downward channel. We could get a little pop there. We'll have to wait and see. But definitely, if we break below Friday's low, 64.60, we would be breaking the last 200-day moving average. It's going to act as support, which is a 200-day exponential moving average around 64.62. And that would not be pretty at all, and we would sell all the way down to 64, and then maybe down here towards 63.50, where we have a little minor gap. We also have a little minor gap down here around 62.55. Let's take a look at the weekly chart. The weekly chart still looks all right, and the reason why I say that, because those of you guys that know how these downward trend lines break, we did have a downward trend line break right here from that high, from this high, we broke. All right, we usually come down here and back test that trend line or come close to it. All right, as long as we don't take out the initial kind of trend line, the initial kind of candle low, either be using this one or this one, then we should be in good shape. So we could get a little bounce on the Qs. You can see here we did have a breakout, rallied all the way back, sold all the way back down, bouncing off the 50-day simple moving average and exponential moving average on the weekly time of the Qs. Also coming near this little back test area of that trend line. So next week's going to be a telltale week, and that's why you have to make sure you have your strategy ready, your game plan ready, and you're on top of your game there. All right, take a look at the monthly chart of the Qs. That trend line right here on the monthly chart of the Qs is the 50% Fibonacci from the tech bubble sell-off. You can see here we rallied all the way from the 2009 lows, rallied right into that level, and we got rejected. And so far, the tech stocks have been the weakest sector. If this upward channel breaks, which for that to break, we would need to go back below 60. It could get ugly. But right now, obviously, it's we need more time to tell. But just keep in mind that we did get rejected from that 50% retracement of the tech bubble sell-off, which was around 70.50, and we want to see if we can get back above those highs, obviously, and that would definitely show some more strength. All right, so let's take a look at the IWM now, the small cap. All right, the Russell 2000. Russell 2000 still remains in this little downward channel. As you guys know, when these downward channels break, it gets real ugly. All right. Because a lot of people are positioned with stops below this downward channel and also lines with some key, it usually always lines up with some key support levels, and right now that key support level is around 80, where we have this last 200-day exponential moving average right there. We did bounce off the 200-day simple moving average around 80.47. You guys can see here we had a similar pattern down right here, and then we broke out. Let's see if this is the same thing. We have a similar pattern. We break out. We are at some support in this 81 area on the Russell 2000, so we got to definitely watch to see what this wants to do. If you can get over 82 and hold, we can maybe make a nice pop back up towards 83.25 or so towards the top of this channel. Taking a look at the weekly chart, just pulling back right here into these moving averages. It has been in a downtrend since we made that high on September the 10th during that week there, and we have 1, 2, I would say 3, 4, 5, 6 weeks to the downside off of that high right there. All right, so maybe they could try to bounce this off this 80 level and hold it. We'll have to wait and see. Take a look at the monthly chart. Monthly chart near this little resistance band in this little 85 area. Obviously, if we pull back, if the market was to really start selling this thing, it could maybe go back down all the way down towards 75. All right, going to the end of the year. We'll have to wait and see, but just something to take note of. So right now, the Russell's kind of in a neutral zone. It's really tough to try to short the Russell right here. Because we could get a bounce since we're at the support zone, moving average, and the bottom of the channel. If the market was to bounce, it wouldn't be a bad idea to try to pick up some Russell and trade that. All right, so let's take a look at that. Now, one thing I've been showing you guys lately as well is the Dow Jones, just the Dow Jones futures, since we had this little nice clean pattern to work off. Dow Jones futures sold off, broke the downward channel, and now we're at the bottom of the support band. I'm not going to go over the weekly chart because I really don't trade the Dow. Just wanted to show this to you guys since we did show it to you guys when we were at this key trend line right here, and it did break down. So 13,000 on the Dow Jones is low. That we have to see if that holds. All right, let's take a look at the dollar futures now. Then we'll take a look at the commodities. Dollar futures, all right, top side of the range. All right, if the dollar futures have been trading in this little range, I would say since back here in September. All right, and if it does, if it wants to do like it's been trading here, that even makes sense. Did I say that right? if the Dow futures, I'm sorry, if the dollar futures does what it's been doing in the past here, I would expect it to sell back down towards the bottom of the range. And if that happens, we're obviously going to see the markets get a pop, and we're obviously going to see some of these commodity stocks get a bounce, which I think, if the market wants to hold, we need to get these commodities to get a bounce so we can at least see some stabilization in some of these energy stocks that have been getting beat down, some of these little gold stocks that have been getting beat down, some of these copper stocks that are starting to get weak a little bit here. And you can see, I don't want to call it right now, but this could be a possible head and shoulders pattern on a bigger scale, right? You have your little right shoulder, you have your head, you have your little left shoulder taking place. This could be something in the making. We definitely want to watch that 79 level if we go back down there. Taking a look at the weekly chart of the dollar futures, the little upward channel that we had in play from back here, September 2011. We did break that. We've sold off ever since, just some little sideways consolidation. This is usually indicative of a move down once you have this little sell-off here and sideways movement. But right now it's actually just a little kind of zone right now where they're battling it out to see who's going to win, the bulls or the bears. If you take a look at the monthly chart, all right, on the monthly chart, there is something that we could recognize here. We have this little downward channel, but take notice also we had this little igniting candle, sideways consolidation, all right, bull flag on the monthly time frame. So this is actually a failed bull flag on the monthly chart of the Dow on the dollar above this channel. If we continue to hold below, I say 81.50, just expect this to trade sideways and maybe start fading back down. We need more time, but definitely something you want to be watching on the dollar. Let's take a quick look just at the euro daily chart. Some of my analysis on it. Take off these studies here so you can see the action a little bit better here. And one thing I was talking about here was how we had this nice little consolidation range that the euro broke out of. All right, from this level, you can see how it's acting relevant. And from this level down here, all right, we broke out, but then guess what? No continuation. They use that as a little fade, a pop, and now we're back below that trend line. So I really want to see the euro get back above 1.3 so I can have some conviction that it's going higher. All right, but if it continues to get weak, we're obviously going to see the dollar gain some strength, the euro sell off, and the market start to get weak. And I don't want to see that because then that means that the euro could go all the way back down towards the bottom here, and we may have some people that are trapped that got long the euro up there. And obviously, they'll start selling. So we'll see. Definitely an interesting chart that's on my radar, on my list of things to watch going into next week. All right, let's take a look at gold via the gold futures, GC. All right, you can see here I actually bought some gold call options on Friday. I've actually bought the November 166 strikes in the GOD. I'll take a look at the GOD chart. It really doesn't seem like the GOD chart is starting to stabilize. But if you take a look at the gold futures chart, we are trying to hold this 1700 area, which has been holding since Wednesday. So we could get a little pop here. Want to see gold really get back above 1720. It did try to get a pop on, get a nice little pop there on Friday, but then they faded it. That's why, I got long, but then they faded. But one thing still looks pretty constructive because this was a trade right here. And of course, gold obviously opens, I believe, at 8.15. So unless you bought the GLD pre-market, you weren't able really to participate in this move because all they did when the market opened was they rallied it up a bit and then they sold it off and faded it. But take a look at the volume. The volume to the buy side compared to the volume that came in when they were fading it is pretty light. So one thing that I would do is watch this trend line right here. All right, kind of like a little downward channel, and see hopefully on Sunday night or early Monday they start to buy the gold up and we could break past that 1720. We'll have to wait and see, but definitely have that on watch as well. Take a look at the weekly chart of gold, and all it's doing is breaking out. We got rejected at the 1800 level, pulling back. We have about a 3-week pullback now, right into the 20-day exponential moving average on the weekly time frame, looking to see if we can get a bounce there. And then we've got the monthly chart still in the uptrend. And let me show you guys the GOD so you guys can see what I'm talking about. The GOD doesn't really look that much constructive. Don't want to delete the drawings. Want to hide the drawings here. It's still chopping around here. We're below the 50 day, the 8, the 20. I did put myself out on a limb there because I thought it was going to break out. But, you don't want to buy gold when everybody's excited. You really want to buy gold when it's looking like crap and people are like, oh, I don't want to put my money in gold. So, And I'm expecting this thing to get a bounce next week, as it was, it did open up early on Monday, did open up on Monday, close high, then it gapped down, got stuck down here on Tuesday and Wednesday, but then gapped up on Thursday, held, and so far held on, so far held on Friday. Really want to see it kind of break this little downward channel and get back above this 160, 167 area or so to have more conviction. But again, I have till November, and I want to see how this plays out. Obviously, if it starts to sell, I'll just take a loss on those call options and put the money to work in something that's working. And that's about it. So that's the GLD's looking. Take a look at this weekly chart here. I had this one more annotated than the gold futures chart. So you can see the weekly chart had this nice little downward channel break. You guys know on these downward channel breaks, you catch that momentum move, which is good. But then you really got to watch out to make sure you take that profit, because what usually happens when you break these little downward channels, they usually tend to pull back. All right, and then you got to see they put that little higher low off this little breakout from the candle that started the breakout from the trend line, and then see if it holds that higher low. All right, and then moves higher. Sometimes you would get that official back test where they really want to shake people out. They bring it down, back test the trend line all the way down here, and then move it higher. I'm not expecting that, but we'll see. All right, if the dollar's at the top of the range, all right, we could get some selling pressure in the dollar, and this gold GLD could gap up on money, then start trading back higher. All right. Let's take a look at crude oil. I'm going to take a look at crude oil via the crude oil futures, and I'll just pop a quick look at the USO. Crude oil futures trying to get a bounce down here. You can see how this 85 level is holding as support. If we break below 85, we do have some nice support down here, right here at 83.50 as well. Take a look at the weekly chart. All right, we are at the top of this little consolidation range. Take off these studies so you guys can see why it's important. And it comes from back here, from where we had this 2010 resistance. Then we broke out of it. We back tested at $85 a barrel level back here in February 2011. That's when the market really shot up there. So that's a major level to watch, this 85 level on the crude oil. All right, if we could hold here, all right, then we may be shaping up for a nice little bounce. Like I've been showing you guys on the monthly time frame of crude oil. Crude oil is going to be making a nice expansion move pretty soon. And I say pretty soon, I mean like within the next couple months or so, but has a nice little pennant pattern on the monthly time frame. So what's going to happen here? Are we going to break out from some type of war overseas, or we're going depression mode and nobody's really using gas, and we start selling off on crude oil back down towards $70 a barrel? Just something to watch. There's going to be opportunities in this sector, and we'll be on top of that. And if you guys follow us at wallstreettrading.com, you guys will be on top of that as well. All right, so that's how crude oil is looking. Let's take a look at the USO, just like I promised. USO trying to get a bounce, had a nice little bounce on Friday, holding this 31.50 area of support, which is some minor support right here. And if we break below 31.50 and hold, the next target will be down here towards 30.53. Then we do have a gap down here around 29.96, call it 30. Take a look at the weekly chart real quick. Weekly chart, you can see here, big little downward channel, this little bull trap that took place here. If crude oil, USO could go back down to 30, as you can see here. That's where the next real support's at. Monthly time frame. If you look at the monthly now, it just looks like sideways range. But trust me, crude oil is going to be up to something real soon, and we don't want to miss that opportunity. So you got to just keep on watching it and stay on top of it. Now let's take a look at copper futures, just a daily chart real quick. All right, copper futures back on top of this little range support, so we could get a bounce in copper. All right, you do remember we did say that this copper was going to sell off since it did break this little downward channel. You guys should know by now, if you guys have been watching these videos, that whenever you break these little downward channels like this, you usually get a nice little fast move to the downside. That's what we got, and now it's right on top of this little support from this little range that I was building since back here in May. Okay, so we could be expecting a little crude pop in copper, which will be good for some of these precious metals. What else? Let's take a look at the volatility index now, the VIX. VIX daily chart, obviously, we did get a nice little trade on that volatility index right here on the breakout, from the break of a little downward channel that we've been tracking. All right, right now, same scenario, guys. Remember, these downward channels, when you break to the top side, they usually pull in a bit here, and obviously every pop that the volatility index has been getting there, they've been fading it off. Every pop they've been fading it off. Every pop they've been fading it off. So we want to see what happens here. Now, if we come up here, if we break this, we did break this downward channel. All right, now if we pull back in here and we make a higher low, or we come back and we get an official back test of that trend line and make a higher low off that 15 area, and we start creeping back up, that's going to be something that's that's it's going to bring some caution to me. Like, okay, are these people going to try to knock this market down or what? But definitely have this on watch to see if this volatility index tries to remain at these elevated levels here that has been in since these elevated levels from the prior levels here that has been holding up above this little 17 level since since a breakout. Definitely something that I'm watching as well. All right, so let's take a look at a couple sectors here now. Starting off with the semiconductors. We've been on top of the semiconductors since it broke down at this range, back test and sold off. It does have a nice little downward channel in here. Could try to get a bounce off this 360. You can see 360 held as a support level this week. Take a look at the weekly time frame. It's a nice little big triangle here. Same thing for the semis. Expecting a big move in the semiconductor stocks. Okay, if tech was to continue to get weak and the semiconductor index was continuing to get weak as well, and we broke this key trend line, that would definitely not be good at all. Let me put the studies back on the weekly chart here so I can see where we are at in relation to the moving averages, and you can see we're sitting right on top of this 200-day simple moving average here. So I'm watching this key trend line on the semiconductor index. Take a look at the monthly, and the monthly's trading kind of in a little sideways range right now as well. Looking like it's getting a little bit weak though, because we do have a little higher low from the highs that we made earlier in the year. All right, so what else do I want to take a look at here with you guys? Let's take a look at the banking index, the BKX. All right, the banking index, I have some channel analysis on this. This was a major little consolidation that we had back here on one of my channels. All right, so that level is going to act relevant and important. That's going to be around 48.27. So if the banks were to sell off a little bit more next week, I would be looking for a buying opportunity in them maybe sometime by early next week. You can see how that trend line is important for my channel. We did have this little consolidation back here. We did have the rally up, back test did hold. That's when they caught the sell off. All right, and we did have it break back above this this key level from the top of this channel range, and it had a nice little pop there, and we highlighted that as well when that happened. All right, take a look at the weekly chart. See the weekly chart's at some resistance from this declining 200-day exponential moving average. Definitely want to watch the banks to see if they're going to try to hold up, or if they fade all the way back. That would not be bullish on the markets. Take a look at the monthly chart, and the monthly chart is having resistance on the banking index around this 50 level here. All right, let's take a quick look at the OIH. Watching these energy stocks, OIH not looking too good now again here. If it does not hold above 39, this could in fact be a possible head and shoulders pattern with a nice little head. That usually the top of the head, the head break above the shoulders is usually the bull trap that gets people stuck, and then you have your little right shoulder that forms right here. So if the OIH continues to hold below 39, that will not be good, and we could get some selling pressure in that sector. Let's take a look at a couple of those stocks in that sector. You can see here RIG had a nice little pop. They have earnings next week, but right now it looks like if it breaks 46, it could trade back down towards 45 and continue its downtrend. Let's take a quick look at Halliburton. Excuse me, guys. Very kind of burnt out here. Burnt a lot of calories and burnt a lot of energy. Let's take a look at Halliburton. Halliburton kind of has a similar pattern as well. Halliburton below 32 and holding below 32 will not look good. Possible head and shoulders pattern. Left shoulder, head, right shoulder. Similar to the OIH. Definitely keeping an eye on this OIH sector. DO remains one of the stronger ones out there. You can see it was trading this little range between 65 and 69.50. And if this one does not get back to the top side, if this one continues, this one continues to hold above 69.40, this may be one of the ones that try to hang out and hold up in the sector, as they do pay a little dividend, and it does look like one of the stronger ones out there. So keep an eye on DO holding above 69.40. I didn't bring up any of the banks. Let's go backtrack a little bit. Sorry about that. Goldman Sachs, one of the stronger banks out there, was holding this little 118 support. Just got to watch that 118 level. If it breaks below 118, expect a back test or a test of this 115.70 area, which lines up with the moving averages. JP Morgan back in the range, back below 43, hanging around the 41.16 area. Citigroup, which was one of the stronger banks out there right now, pulling back into its rising 28 simple moving average. So that's about it, guys. Going to go ahead and end the video out short here. I'm pretty sure you guys are tired of hearing me talking now and want to get back to your weekend activities. We will be in the chat room Sunday night, 9:30 p.m. Be there, be square. We're going to go over all the charts that we're going to be watching next week and go over all the trades so we all can set our alerts and be on the right side of the market, which we try to do every day in the chat room here. So have a great weekend, guys. Enjoy the rest of your week. If you guys are football fans, let's go Jets. You guys in the chat room know I'm a Jets fan. And I'll catch you guys on Sunday night. Thank you. Have a great weekend.